House prices just hit their highest level ever. But strangely, rents are getting cheaper. So how is this possible? Well, if you're scratching your head right now, you're not alone. This weird contradiction is creating a property market that's totally flipped on its head, and most investors have no clue what's really going on. So in this video, I'll break down exactly what is going on, why it's happening, and most importantly, what you should do about it. Before we get into how things are now, we need to understand how the housing market normally works, because if we don't, then none of this will make sense. And to do that, I want you to think of the market like a two-lane road. One lane is buying, the other is renting. When mortgage rates are low, more people switch to the buying lane. This takes pressure off the rental lane, so rents stay stable. But when mortgage rates shoot up, like they have now, fewer people can afford to buy, so they stay renting. This makes the rental lane more crowded, pushing rents up. Meanwhile, the buying lane gets quieter, which should bring house prices down. That's exactly what you'd expect to happen right now. And when you look at mortgage rates, that expectation becomes even clearer. Back in 2022, the average 2-year fixed rate mortgage was 1.95%. Today, it's 4.84%, more than double. Let's put some numbers on that. If you were borrowing £300,000 on an interest-only basis at 1.95%, then your monthly payment would be around £487. At today's 4.84%, you're looking at £1,210. That's an extra £723 every single month straight out of your pocket. So when everyone can suddenly afford to borrow less, house prices should drop, right? Meanwhile, demand for rental property has never been higher. The UK population grew by 906,000 people in 2023, followed by another 728,000 people in 2024. Yet the number of rental properties hasn't increased at all since 2016. Logically, this should have played out as a double blow: falling house prices and soaring rents. And for a while, that's exactly what experts predicted. Savills even forecasted a 10% drop in house prices for 2023. But instead of a crash, something very different happened. House prices hit an all-time high, and rents, after years of climbing, actually started to fall, which means something is seriously off. So what's really going on with this topsy-turvy market? Well, I'm about to let you in on something that most news headlines completely miss. The truth is, we have had a property crash. It's just happened in a way that's invisible to most people. Back in 2021, if you had £100, you could walk into a supermarket and buy about 370 Freddo's bars at 27p each. Stick with me, this is relevant. Fast forward to 2025, and that same £100 now only gets you around 320 bars because the price has jumped to 31p each. Has your money technically stayed the same? Sure. But in reality, you've lost 15% of your purchasing power. That is exactly what's happened with house prices. Yes, the numbers on paper are still climbing, but once you adjust for inflation, UK house prices have actually fallen by around 15% from their peak. In real terms, that is, after you adjust for inflation, property prices have rolled all the way back to 2013 levels. And let's be honest, 2013 wasn't exactly a booming market. It was a low point after years of falling prices following the 2008 crash. So while it looks like prices are going up, they're actually being eroded by inflation. Now, what about rents? For years, they've been surging. The average renter is now paying £3,000 more per year than they were just 3 years ago. At one point, rents were climbing at 7.3% annually, completely outpacing wage growth. But that kind of growth is never sustainable. Eventually, people couldn't pay anymore. And even the greediest landlord eventually hits the ceiling of what tenants can actually afford. That's why, for the first time in years, rents have actually fallen slightly. This doesn't mean that rents are about to crash. It just means that after such a massive surge, they're finding their new level. Now, what's interesting is that not everywhere is feeling this slowdown in the same way. In London, where rents shot up faster than almost anywhere else between 2022 and 2024, affordability limits have kicked in. People simply can't afford to pay more. So growth there is now among the slowest in the country. Meanwhile, in places like the northeast that didn't see such dramatic increases, rents are still climbing steadily. The same split is happening with property prices. The most expensive areas of the UK are flat as a pancake because affordability was already stretched to breaking point, and higher mortgage rates were the final straw. But more affordable regions like the northwest are still seeing decent growth. So what we're seeing here isn't some random market fluke. It's the economy finding its balance again after a weird few years. And if you want to stay ahead of these shifts as they happen, we send out a free weekly newsletter breaking down the latest property trends, market insights, and the best opportunities for investors. And you can sign up using the link in the description. Now, this brings us to the big question. What does all of this actually mean if you're an investor? Well, there's actually a really interesting twist in this story. Despite all this turbulence, the last few years have actually been pretty good for property investors. How? Because rents have grown faster than property prices, which means rental yields have been improving. It's like getting a pay rise while your expenses stay the same. Not a bad position to be in. And here's why the current market setup looks promising for smart investors from here on. First, as wages increase, which they're finally doing after years of stagnation, rents will continue to rise. Maybe not at the crazy 7% rates we saw before, but steadily upwards. Remember that population growth I mentioned? Nearly 1 million new people each year need somewhere to live, and there's been literally no increase in the number of rental properties since 2016. What's more, the overall number of rental homes is unlikely to grow much in the coming years. All those tax changes and new regulations have made life harder for small landlords, and many have been selling up. So if you're investing, here's what you really need to know. First, don't panic when you see headlines about record high prices and think a crash must be coming. When you account for inflation, everything is at an all-time high most of the time. What matters is inflation-adjusted prices, which tell a completely different story. Second, location is more critical than ever. We're in a two-speed market, and that's likely to continue. Future returns in expensive southern areas versus the more affordable north could be worlds apart. Right now, the north offers better rental yields and better growth prospects, a rare double win. Third, mortgage rates have likely stabilised. If you buy at today's rates, and the numbers work, they're likely to keep working. Rates should remain relatively stable and rents will continue to climb. And remember this, normal, slow and steady markets are actually the best time for investors who are still building their portfolios. The crazy markets make for exciting headlines, but usually lead to poor long-term decisions. In fact, we're securing some amazing deals right now, precisely because developers can't sell as easily to homeowners, and many other landlords are too nervous to act. So the bottom line of everything we've discussed today is this. Today's market might be strange, but if you can look past the headlines, it can be a strangely positive one for investors to operate in. But if you found this breakdown of the current market helpful, you might be wondering what happens next. Are house prices about to explode higher despite everything we've discussed? Well, check out this video next, where I reveal the surprising factors that could send UK property values soaring in 2025.